When Patrick Moorhead, founder of More Insights and Strategy, was asked about the comparison between NVIDIA and Cisco, he said, "I grew up in the dot-com era. I think it was about 10 years into my career, and there are definitely parallels, right?" He added that there was overinvestment in this space, and that NVIDIA was undoubtedly one of the biggest builders of this generative AI days. However, he cautioned that we should be very careful and look for what I refer to as the precursors of something that could pull back. First off, I don't see anything changing for 6 to 9 months, but we do need to look at the downstream profitability that ecosystem participants, software companies like Adobe, Salesforce, SAP, and Service, are making or not making. If these consumers and enterprises aren't paying more for those new AI features, the whole gravy train will come to an abrupt stop, as we witnessed in the internet bust. With all of this in mind, what will NVDA need to demonstrate sequentially at this point in order to cement the larger narrative that they have been able to sell the markets? He continues, saying that the next generation of NVIDIA's growth will be focused entirely on the enterprise. It's hard to ignore the impact that artificial intelligence, AI, has had on the entire technology landscape over the past year or so. As 80% of data for companies and businesses is still on site or on the enterprise edge, what they're doing is enabling companies like HP Dell Technologies, Pure Storage, and Lenovo to build that out. This week, he claims to have personally attended the HP and Pure Storage event, and NVIDIA has been the standard bearer. The company's cutting-edge chips are at the center of the AI revolution, providing the computational horsepower that makes it all possible. As a result, NVIDIA's stock has increased by more than 200% year-to-date. These gains also caused the company to split its stock into 10 separate stocks, which led many Wall Street analysts to reevaluate NVIDIA's future prospects. One analyst has raised his price target for the company to $200 for the next 12 months, and investors should take note of this bullish prediction. That indicates a 58% potential gain for investors over the stock's current price. The analyst's call and the reasons why NVIDIA stock is a buy before the company's annual shareholder meeting on June 26 will be covered in today's video. However, before we get started, if you want to stay up to date on the latest news and updates about NVIDIA and the stock market, you can subscribe to our channel Investing Tutorial account. We post updates about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest updates about the market. Now let's go back to today's video. Patrick, the founder of More Insights and Strategy, was asked about the private cloud play. He responded, "Well, it's very positive. First of all, there's a little bit of a diversification of risk, because if the only enterprise AI plays are in the public clouds, then it's pretty much winner take all. And I view this enterprise play as if there's something really here. You also have the VMwares that are owned by Broadcom, the Red Hats of the world, IBM software, and even HP software that will benefit from this infrastructure expansion. However, the enterprise data center play is more resilient than, say, the public cloud play. It's like a gift that keeps on giving. So if NVIDIA and its partners can pull this off and enterprises can begin to build their own or leverage the advantages of enterprise SaaS companies, as I mentioned earlier, then this will likely be a 5 to 10-year run, and perhaps we won't witness another dot-com bust like we did decades ago. We believe the analyst hit the nail on the head when he said that NVIDIA's competitive edge lies not only in the hardware, but also in the related software, which is in high demand and aids in delivering optimal performance. If NVIDIA meets Hans Mosesmann's $200 price target, its market cap would be within striking distance of $5 trillion. He believes NVIDIA can achieve that thanks to one overlooked aspect of its business. The real story, according to the analyst, is in the software that goes well with all the wonderful hardware. He also suggests that demand for software will rise over the course of the next 10 years in terms of overall sales mix. Indeed, according to Kathy Wood of ARK Invest, the entire addressable market for AI software may be valued at $13 trillion by 2030. In addition, NVIDIA plans to launch its next-generation Blackwell GPUs later this year, solidifying its position as the industry leader in AI chips. Given that Nvidia has gained more than 20,000% in the last 10 years, the stock is currently trading for 51 times forward earnings, which some may find expensive. Nevertheless, for this reason alone, we can say that Nvidia is still a buy, and the current decline is the ideal time to purchase additional shares. However, since Nvidia's annual shareholder meeting is quickly approaching, we need to discuss what this means for investors and why the stock is a buy before the event. When I asked Patrick about this, he said, "You mentioned all the players in the space, and it makes me think about the competition of it all. Could you please explain the primary danger to Nvidia's chip pricing power and provide some background on how much its chips cost in comparison to those of some of its rivals?" And that's astronomical. That's probably over 1,000% gross margin. But the longevity here means that there are competitive levels of competition. First, there are the merchant silicon providers, the AMDs and Intels of the world, and then there are the homegrown players like Google, AWS, and Azure. At the moment, there's a race between Nvidia and AMD to get a lock-in through their software. I do think that shipbuilders, and AMD in particular, have emerged with competitive chips for training, and there are competitive chips for inference. But AMD Nvidia is attempting to stick with that software lock-in, known as CUDA or Nvidia NMs. Therefore, you must choose Nvidia over the other company because of its software. On June 26, Nvidia will hold its annual shareholder meeting to discuss strategy and vote on items such as board approvals. While annual shareholder meetings generally don't have as much of an impact as earnings do, this one is nonetheless significant because it may help reveal some information about the company's and the AI market's future prospects. Nvidia's cash flow is particularly strong, which is one of the reasons why the stocks are still looking strong as the meeting draws near. The best product goes a long way, so Nvidia's competitors need to produce a product comparable to Nvidia's if they want to chip away at its market share. To do this, they need a lot of money. For example, AMD spent $1.5 billion on research and development last quarter, while Nvidia spent $2.7 billion. However, keep in mind that Nvidia is already in the lead because it has the best technology on the market and is still outspending AMD almost 2-to-1. This is something that many analysts advise investors to keep in mind. However, Intel is outspending both of them, spending $4.4 billion in the most recent quarter. The problem with this is that Intel is losing money and is unlikely to be able to continue reporting negative free cash flow. Therefore, given that Nvidia has more than enough resources to defend itself against its main competitors, we can conclude that Nvidia can maintain or even increase its already significant market share. There are undoubtedly other factors, but it's reasonable to assume that the global AI market will grow at a compound annual growth rate of roughly 28.5% through 2030. This is an extremely rapid rate of growth, slower than the company's recent growth at breakneck speed, but still an incredible rate to maintain. We also need to keep in mind that this is only an estimate for the entire market, not just the semiconductor industry, which is Nvidia's primary business. So, this is a very rough measuring stick. The semiconductor industry may grow at a slower rate than this. This brings us to our next point, which we will discuss now. But first, thank you if you watched the entire video. Since it takes a lot of work and time to create these videos, kindly hit the like button and subscribe to the channel if you found them entertaining. This greatly aids in our growth, which is related to the video. In the end, and I'll look that up and give that back to our viewers here, architecture is what it is. But all these things considered, it's been one of the most crowded or de facto, as Goldman Sachs has called it, AI trades here. I asked Patrick that eventually, every dinner table will know about compute unified devices, whatever the A stands for, but applications something like that. Paul Meeks, CIO of Harvest Portfolio Management. The last item on the list doesn't change anything. As you can see, the stock has performed incredibly well. There has been talk about peak data centers and AI sales, which is something that will inevitably come to pass. However, in the near to intermediate term, that is, over the next few years, I don't think there is much controversy surrounding that. Instead, I think that the main event will be Wednesday, when they hold their annual shareholders meeting. The meeting begins at 9 a.m. Jensen Huang will proudly walk onto the stage at Pacific Time, which was not disclosed in the event's press release. However, I think that's the case. It's basically industry standard and will likely reiterate how wonderful artificial intelligence is. The important thing here, I believe, is to reassure investors that there is still a long way to go. Based on what CEO Jensen Huang said on Wednesday morning Pacific Time, I believe that we will see a reversal and a rebound in the stock. It's interesting because I wonder if part of the issue with a company like Nvidia is that the growth has had some profit-taking. We don't have a great understanding of Nvidia's growth story because of our hasty expectations and the fact that it's such a new name that people need to get used to. That's correct, you're right, because if you think the company will continue to outperform its numbers, after all, they have been crushing the competition for almost a year and a half since the advent on November 22 of ChatGPT. You should probably expect more of the same. What's interesting is that the company doesn't release its earnings projections in advance. I expect them to continue beating numbers and pushing the narrative, which I do think is true, that the AI chip boom will last longer than people think because there will be much more large language model building and then inference work at all of the hyperscales and the other guys that are spending tens of billions of dollars to continue building out AI infrastructure. Because of what happens when you start pre-announcing numbers and then you stop, you can see what happened a couple of quarters ago with Supermicro, another company in this space. Thus, that sheds some light on how you assess NVDA's growth story. Paul was asked if he thought that market movements similar to the ones we're currently witnessing would indicate a buy signal. What I'm looking at is that while I'm comfortable with the fundamentals, I'm also fairly confident that there will be a fundamental push upward on Wednesday morning at the annual meeting. What I'm looking at right now is that while I'm inclined to buy more, I do want to buy some more, but I'm looking for a technical support. I had assumed that the 20-day moving average would be the key, and that's actually where the stock is right now. I don't think this is a stock that should be shorted here or even sold here, so I'll probably wait to see if it settles lower at the 50-day moving average. I'm hoping for some technical support where the stock finds support for a few days and the volume slows down a little bit. I'm comfortable with the fundamentals, not the technicals. Well, it's interesting. 2. We've been hearing the question about concentration valuation, and I feel like that's been the reigning cry from a lot of nodes over the past year. When asked Paul how much the valuation factor influences your overall investment outlook, not just for Nvidia holdings, but for your entire portfolio when it comes to technology in general, he replied, "Yes, that's how I see it, and since Nvidia controls my industry, you have to talk about it naturally. Is the stock expensive? After its most recent run before to this decline, it might be a little bit overpriced, but it had not been, and the closest comparison, I believe, is Cisco Systems, which built out the internet infrastructure in the very late 90s and early 2000s. That stock rose to over 100 times earnings. And so now that we are at 30 or 40 times profits, is it cheap? No. Is it somewhat pricey? Yes. Is it outrageously expensive? No. I believe that I am more concerned with achieving ethnic stability than I am with valuation, as my current position is already rather significant. I will revisit and add to it later. Thank you for watching this episode of Investing Tutorial. We hope you found the information valuable and are feeling more confident in your investment journey. If you enjoyed this video, please give it a thumbs up, share it with your friends, and subscribe to our channel for more insightful content. Don't forget to hit the bell icon to get notified whenever we post new videos. Happy investing, and see you next time.